Today is Monday, April 21st, and this is the ADM Investor Services Weekly Market Kickoff. Please note that the views and opinions expressed here today are solely those of our guests and should not be construed as the views or opinions of ADM Investor Services or ADM. Today's guests are Mark Soderberg, ADMIS Senior Ag Analyst, Alan Bush, ADMIS Senior Financial Economist, and Mark Bowman, ADMIS Senior Market Research Analyst. Starting with the financial markets this morning, Alan. Many people are concerned over tariffs and the recent losses in the stock index. What is your outlook for stock index futures?
Okay, well, in the near term, stock index futures will continue to be primarily influenced by the ongoing trade situation and questions about the Federal Reserve's independence. In the longer term, however, the interest rate influence will, I believe, come to the rescue for this market, especially when the Fed starts on its path of lowering interest rates, with the first rate reduction likely at the June 18th meeting. So there appears to be 4 rate cuts coming from the Fed this year, but the May meeting is likely to be skipped. So that meeting will probably produce an unchanged policy, but the Fed should be on its path toward easing at the June meeting and then several meetings after that.
And to put you on the spot just a bit, what market is the best short, and conversely, what market may be the best long play right now?
Okay, the best short continues to be the U.S. dollar index, which has the most bearish fundamentals and the weakest technicals, especially after the March U.S. dollar index recently and easily broke through the 100 psychological support level. The best long is the gold market, which today advanced to its highest level on record, with the March gold contract at one time today up over $110. So I've been getting a lot of calls and emails on the dollar and gold. So I have not changed my opinion at all. It still looks like the greenback will continue to come under pressure, and the gold market most likely will continue to advance.
And Alan, I know this is your last segment here that you're taping with us. We want to wish you good fortune in your retirement, and please don't be a stranger to us.
Okay, thank you very much.
Yeah. Mark Soderberg, how will the current forecast impact trade across the ag space?
Well, I think weather over this past Easter holiday weekend was largely as expected. Rains did favor the southern and central portions of the Midwest. Mostly dry conditions, however, for the northern plains and the western half to 2/3 of Nebraska and the western third of Kansas. Rains this week will again feature heavy amounts across the nation's midsection, with the heaviest totals now shifting a little bit further west to include much of the southern plains along with the western and central corn belts. If realized, this should bode well for the hard red winter wheat crop. Rains are expected to be a little bit lighter around the Great Lakes region. However, normal to above normal temperatures are also likely to spread over a vast majority of the Midwest. While the warm, wet outlook will continue to cut into drought readings across the Midwest, planting progress will be delayed, particularly for corn. In this afternoon's crop progress updates, I would look for corn plantings to hold in the single digits at 8%. That would be below the 11% pace from a year ago and the 5-year average of 10%. And I've got bean plantings likely to reach only 5%. That's just slightly below the year ago pace. Drier conditions across the northern plains, however, should have enabled farmers there to get a jump on spring wheat plantings. I think plantings there likely to reach out to about 15%. That's above their historical average. If these wet conditions across the nation's midsection stretch out into May, it would have the most impact on corn, likely resulting in farmers not being able to reach the 95.3 million acres as forecast here at the end of March. So I look for corn just to continue to be the best performer here in the ag space.
And Mark, can you provide our viewers with a quick summary of how speculative traders are positioned across the ag space right now?
Yeah, last week, money managers, they were big buyers across almost the entire ag space. The only area they were net sellers was in cattle, that being both live and feeder cattle. In corn, there were net buyers of around 71,000 contracts. This extended their long position back out to 125,000 contracts. However, that's still well below the recent peak of 364 back in the middle part of February. There were also net buyers across the entire soy complex and all three classes of wheat as well. In soybeans, they bought nearly 77,000 contracts last week. That was the most in 1 week in the past 11 months. This flipped their net position back around now to net long about 26,000. In bean oil, the money manager long position has now stretched out to 41,000 contracts. They still remain short in the meal. Net short there is about 70,000 contracts, and also short across the board in wheat. Despite the recent buying there, they're still holding a net short position of about 165,000 contracts across the three classes combined. Relatively large, historically speaking.
Thank you, Mark. Mark Bowman, cocoa saw first quarter grindings data come out recently. What impact do you think this could have on the market?
So all three grindings numbers for Europe, Asia, North America came in better than expected. And after the Swiss-Belgian chocolate processor Barry Callebaut reported sales volume at 4.7% down from a year ago in the first half of their fiscal year, the trade had been looking for first quarter grinds to come in 5 to 7% below a year ago. Instead, Europe was down 3.75%, Asia down 3.45%, and North America down 2.45%. This suggests that demand was not hit as hard by high prices as feared. This could open the door for a move back to $10,000, if not the highs, if the Ivory Coast mid-crop is disappointing. Rains in West Africa are on the light side and temps are above normal. And growers say better rain volumes are needed to fill out the pods for May harvest.
Mark, looking at cotton, what is needed for a cotton market or the cotton market to put it in a low?
All right, we saw the market collapse to new lows after the retaliatory tariffs were first announced. And then they bounced after the 90-day pause was announced. Vietnam is our biggest buyer this year, and they got particularly hard by that tariff. So a settlement on that trade tariff issue is probably the biggest need the market has. China is not a biggest buyer in the past. They're still the fourth largest. That, of course, is the ongoing trade war that's probably the most in focus right now. So if we can avoid a permanent tariff on them or anybody, we could argue that the most bearish news for this market has been felt. West Texas is still dry. That could delay plantings. There are wet fields in the Delta that could also slow plantings. Still very early in the season for them. As of last week, the U.S. crop was 5% planted versus 8% a year ago. And on average, and Texas was 8% versus 12% a year ago and 13% on average. The relatively low price, the vulnerability on exports may pull plantings down from their current expectations of 9.87 million acres. This is down from 11.2 million last year. So that second factor could be lower planting and, of course, poor growing weather, which at this point there don't seem to be too many alarm bells except for some of these wet conditions in the Delta and the lingering dryness in Texas.
Thank you all. Remember, the views and opinions expressed today on this video are solely those of our guests and should not be construed as the views or opinions of ADM Investor Services or ADM. If you'd like more information about our brokerage services, would like to speak to one of our experts about managing your risks, or would like to open a trading account, please visit www.admis.com.